Okay, this is Mike Reed at tradestalker.com. I'm going to go through a quick look at the spreadsheet indicators, the nightly indicators. Um, Last time I did this update, we were coming in. Uh, I stated that coming into the first week of January, things should be looking potentially ripe for a top. And at the time, the S&P 500 cash was stuck right around 12, and the S&P futures also. S&P futures are stuck around 1258 area on the top side. That was a good headband resistance at 1258 for about 7 days running, and then they broke out coming into the new year. Um, so what we have, the breakout, and what I show here is that even though we're at new highs, we're going to look at some of these indicators that not at all confirming these latest highs. This is a internal gauge. I like when these do a crossover, and this is close to a cross here. Um, Positive momentum, positive negative momentum indicator. It's also slightly above the overbought side where it can stay overbought, but when it rolls over and crosses, it's generally a heads up or red flag. Um, Another thing, we haven't had a whole lot of volatility because normally my RBI model, this is the last buy signal. This is a small buy signal. Um, Off the low, the very first sell signals has kicked off a new run. They were not good for only but a day. In any case, no signals for a while, being pretty flat. Should be starting to get the internals to move around with price. McClellan oscillator. This is this is an internal gauge. It's very common. Been around for a long time, and it's making new highs here, and this is not confirming. Couple more to take a look at here. Um, a four-day breadth over the last 4 days. We made some minor progress with price, but breadth has not caught up or kept pace. A couple more before we get to looking at as far as two more I'm looking at starting to roll over here. Our this is the intermediate term volume oscillator, and pretty good when the oscillator crosses 10-day EMA. Generally is a warning, and as you see, it's kind of rounded out and not internally not kept up with prices. The same thing here with the last one was up down volume. This is one with advances declines. Crawling up here, but almost about ready to could roll over here, and a crossover on a close would be another red flag. Now, what the market has potentially short term to hold it up is that a few oscillators, such as my combo oscillator here, and it's pretty good at picking off lows and highs. What's most important is how close the bands have pinched together here, and we just went from a sell on this day to a short-term buy on Friday. And if they don't turn right up on Friday, I guess to tie it together, this is one last thing to tie it together. We'll go to the sentiment, but internally, we're at a place where the market should bounce. And if it can't, with the bigger picture oscillators, internal gauges, sorry, here, rolling over and potentially to come down. And here, roll over and come down. If they cannot get a burst going from this spot here, get over 1270 and hold, then suspect trouble. One last thing to wrap before we wrap this up is the sentiment page. The last time I mentioned that the S&P VIX ratio had gotten to a big extreme. Since then, that's pulled back to revert to the mean while prices have gone higher, and now not confirming. So the next spot, if it breaks the this upsloping moving average, would be coming down to the bottom band. In addition, on a buy signal early last week, and then on Thursday we had a sell signal coming in. Don't have all the ducks lined up in a row. I'd like to see a series of sell signals at a high and buy signals at a low. So in any case, for a quick wrap up here, looks like Monday, Tuesday this week will be key. The key area on the downside, which twice held this past week, was 1258 area. 1258 was the high, the breakout high. So far, we just pulled back and held the breakout high. So if the internals roll over and prices, the S&P 500 trades under 1258, especially on a close, that will be a turn in trend, and that is what it's going to take here short term to start a correction. So hope that makes sense. Internally, not quite keeping pace. The frothy sentiment has backed off, and now if we turn down, they may just go from super bullish to start turning a corner to bearish. Internally can roll over, and if prices, which is the most important of all, breaks down to 1258, then that sets us up for decent sized correction.